All right, welcome, welcome, welcome. Hey, this is June Collier, and in this video, I'm going to show you how to sell a cash secured put, and then I'm going to show you how to close out the contract. Now, yesterday, I did a video and I walked you through that process of me selling a cash secured put on Microsoft and then buying the contract back. I forgot that I had, it slipped my mind that I had also did this same cash secured put inside of my Charles Schwab account. So yesterday you saw it in my eTrade account, and then I remembered that I had written the same contract in my Charles Schwab account. And so in this case, you're going to not only see me do it in the Charles Schwab account, but it is 124, which means that the market is still open. You're going to actually see me live trade and actually buy my contract back, and then exit the contract. Okay. And so what a cash secured put is this. I wrote a contract that basically sold. In this contract, I sold a contract that said, hey, I will buy Microsoft at 250 by, what's this, June 17th. Ah, people always call you at the wrong time. So I said I wrote a contract that said I would buy Microsoft at 250 by June 17th. Okay. So it's not June 17th yet, but the contract says that I'll buy Microsoft at 250. Well, I got paid money to do that. Microsoft currently right now is at 270, 272. We'll take a look at that here in a minute. And so the contract that I wrote is not as valuable as it was when I wrote it. Now, I received a premium, so it has lost value since that time, which is exactly what I wanted. Okay, so let's take a look at that so that we can make it real clear. So the first thing that we're going to do is share my screen. So I'll go ahead and share the screen here. And the first thing I want to do is I want to just kind of come here and look at Microsoft. Microsoft is trading at 271.22. And if we go and look at, you'll see here, we're going to go to June 17th. That's the contract that I wrote. And I sold the put. I sold the 250 put. So right now we see that the bid is 149. The last person that bought this contract paid $1.50 for it. Okay, $1.50. Now, back when I sold it for $8 and some change. All right, so let's go on over here to Charles Schwab. And I really like Charles Schwab because it gives a lot more detail as it relates to dollar amounts and that type of thing. So you'll see right here, here's the June 17th Microsoft 250 put. See that put right there? And you see that -2? That means that I sold it. Okay. If it's just a positive number like this one right here, that means that I bought it. But I sold this. So when I sold it, we'll go over here and we'll see what I sold it for. See how I hovered over this? I sold it for $8.52 a share because I sold two contracts. One contract is worth 100 shares. So two contracts would be worth 200 shares. I was able to receive $1,704.68. That's what came into my pocket. Today, the contract right now is only worth $284. I sold the contract for $1,700. Today is only worth about $284. Okay, which means that I have an 83% gain on what I have so far. So if I sold it right now, I'm going to net roughly $1,420. Does everybody see that? I can just hover over here and it just kind of gives you that number. All right. So I am ready to go ahead and buy my contract back. I'm ready to go ahead and pay $284 for the contract. I'll buy it back. That will put me at about $1,400 that I will have made in my pocket in the last 2.5, 3 weeks. Okay, so let's go ahead and take a look at this. So how do we get out of this contract? Because this is a live contract that I'm in right now. How do I get out of the contract? I'm going to go over here to the right. I'm going to click on this drop down here, and I'm going to go to trade options. So we're going to go to trade options. All right. So what you're going to see is I'm trading the Microsoft put. All right. And I am going to be trading the June 17th, 2022 contract period. It is the 250 put. This is the Microsoft. Now, remember, I sold to open. So now I am going to buy to close out of the position. And as you can see, I have 2 positions to buy to close. So I'm going to select my action. We'll click that. We're going to click buy to close. And then the quantity is 2 contracts. I had 2 contracts. So I'm going to go with 2 contracts. Now, if I scroll over, I can see what is going for right now. Right now is going for right at 136, 137. This is our bid and our ask. The mid is 136. Okay. So what am I going to do? I'm going to go down here. I'm going to put in a limit price. I'm going to see if it lets me do the 135. Okay. I'm going to do a limit 135 deck for today only. So it's going to cost me $270 to buy my contract back. All right. Matter of fact, let's do 136 just to be on the safe side. I don't even mind doing 137. I'll do 137. Okay. That's the ask. I'll do 137. Let's see what happens. So let's go ahead and review the order. So here's the order. The order is basically telling me this is in my IRA account. It's telling me that I am going to buy to close out 2 Microsoft 6/17/2022 250 put contracts at $1.37 for today only. Okay. All right. I'm good to go with that. We see the price of the stock. And so it is going to cost me about $275.31. I'm okay with that because remember, I made $1,700 on this. All right. We will acknowledge that and we'll go ahead and place our order. Okay. So it tells me that the order has been received. All right. So now what I want to do is I just want to see what the status of my order is. So if I click on order status, let's wait for it. All right. So you will see that now my order status has been filled. So I bought my contract back. I bought it back for $1.37. I bought 2 of the contracts back and it has been filled. Okay. And it just says that it's going to settle June 3rd. And that's, what's that? Is that tomorrow? What's today? Today is the 2nd, I believe. So this is going to settle tomorrow, but it has been filled and it has been closed out. So now I'm out of that position. It cost me $1.37 per contract. So $137 per contract times 2 to get out of the contract. And now I'm able to keep all the money that I made minus me buying the contract back. Okay. So hopefully that makes sense. I'll stop sharing my screen here. We'll get back here. Hopefully that makes sense to you. It is pretty much that simple. You know, I do these stock classes once a quarter. We're taking off this summer, but I'll be back in the fall teaching the stock class, also teaching options, but I love selling cash secured puts, because as soon as I sell the cash secured put, it puts money in my pocket. Now, you have to have the money in order to sell a cash secured put. So if I'm selling a 250 cash secured put, that's $25,000 for one contract. If I did two contracts, I have to have $50,000 worth of cash in order to do that. Okay. So selling either a cash secured put or even selling a covered call requires a little bit more capital, especially if you're doing it for large companies like a Microsoft that's trading at the amount that it's trading at. Okay. So I had to have $50,000 in the account in order to be able to write that particular contract. But it was a good deal, right? It was a good deal. And I put roughly $1,400 in my pocket in about 3 weeks of that deal. So if Microsoft drops back down again, down around 263, 264, something like that, I'll probably write that contract all over again and do the 250, sell that covered call, and run that play all over again. So hopefully you learned something from that. This is June Collier, just sharing some knowledge with you, and we'll talk to you soon. God bless, take care, and we'll see you soon.